Hey everybody, this is John and welcome to the free video. So the market here has been holding up pretty good amidst a lot of crazy and volatile action. And you can see, of course, that we've got a lot of activity between the fire line at 265.90 and the snow line at 254.82. Also keep in mind that throughout this process, we want to recognize where the fib levels of the major swing high and swing low in February are sitting. And you'll notice that this fib line at 265.90 also lines up very neatly with the 382 retracement. So the idea here, now we do have, again, the kind of the W-shaped bottom that we've been looking for here. But the question is this time going to be enough to kind of get this going? Now in the premium video, I want to show you some internal indicators that are pointing towards actually a rally, okay? I mean, the skew and all that stuff is all kind of teeing up here nicely. But that's shorter term. That's over the next couple of weeks. Really the question here is, what is it going to take price-wise for this to kind of get anything going? And from a price perspective, if we can actually get a solid close above this fire line, that opens up the door for all the stop losses that are sitting up here on the short side, and there are a lot of them. So from there, we want to take a look at the Qs and say, okay, well, what about the Qs here? The Qs here, although they had a better day from a net percent change basis, are not as critical to the market here as the spiders. The spiders are deriving this thing, okay? And one of the things here is that almost all the sectors are following the spiders lockstep, but we did have a breakout today in the energy sector, and this is a big deal. This energy sector had been forming a bearish base here for the better part of 2 months, okay? And this is a very bearish pattern with the expectation that, oh my gosh, this thing's going to go lower, it's going to take the market down with it. And instead, it is breaking out here, and at this point is very near to forming a squeeze to the upside. So this does change a lot of dynamics about the current market. Now, the energy market isn't a huge percentage of the S&P 500 as it was kind of way back when, but it's still a significant part. And you can see here that it is also testing that 382 retracement. So keep an eye on it for tomorrow. If this thing can get going, it's going to help the S&P 500. And then just keep in mind, for people that are short the S&P 500, when they start getting stopped out, that means that the funds that are following all that kind of stuff have to buy all of the 500 stocks in the S&P 500. So it gets kind of be kind of an interesting domino effect here, and that's what I'm looking for here over the next week or so. Okay, and then from there, one of the more one of the things I'm keeping an eye on here quite a bit is the Russell. The Russell here has showed a lot better relative strength than the rest of the market, while the S&P 500 and came down to pretty much retest its lows. The Russell here is putting in a solid higher low and is trying to get something going here. Now you see on the daily chart, we don't have anything in the way of any squeezes. However, when we go to the weekly chart, you can see that we have a pretty decent squeeze setting up here. All right. Now, the idea here with this is that I know, there's a lot of bearish sentiment right now, but the idea is, look, when you're extended, that's the time to look at being bearish. When you're down here at support and you've got a squeeze, that's the time to look at potential buys. All right, that's what I've got. You guys have a fantastic evening, and we'll see you at the next update.